Why you should never buy a piece of rental real estate that has negative cash flow. We're going to get into all of that. Real estate is a great way to build wealth. However, it's important to be aware of the risks involved. And hey everyone, I'm Clayton Morris, founder of Morris Invest, a full-service rental real estate company. And this video was born out of some real-world examples. We've had a couple of clients who've come to us recently who've told us some horror stories about working with other companies. And I'm not going to name names. I've done a whole other video specifically on buying properties above the appraised value, which you should never do. You should seek out that video. But again, these clients have come to us and said, yes, last year or 2 years ago, I bought a rental property with this other company, and it was a turnkey company. And they were telling us that we would have negative cash flow, meaning we wouldn't be making any cash flow or negative cash flow for the first few years. And that eventually, 3, 4, 5 years from now, you would be able to have positive cash flow on that property. And I heard these stories and I couldn't believe it. We had a team meeting about this, and our team was talking about how we've had a number of clients telling us these stories lately. And I said, you've got to be kidding me. This is what they're telling people now in 2023 and 2024, that they have to buy investment properties with negative cash flow? Absolutely not. I want to go through exactly why that is total garbage. One of the biggest risks in all of real estate investing is buying a property with negative cash flow. We all remember what happened in 2008, right? You do not want to be underwater. So what is a negative cash flow property? Well, a negative cash flow property is simply that, a property that costs more money each month than it generates in income, the operating expenses, the amount of money you're paying out to a mortgage. This means you will have to put money into the property each month to cover the costs that you don't have coming from cash flow. There are a number of reasons why you should never buy a negative cash flow property. Number one, it's a losing proposition. Think about it this way. If you're constantly putting money into a property, you're never going to be able to build wealth. You'll be working to pay off your debt instead of building equity. We want to build equity, and we want that monthly cash flow to live the life that we want. The other point I want to make is it's risky. If the market suddenly takes a downturn, you could be forced to sell the property at a loss. You'll be out of pocket and losing money. This could leave you underwater on your mortgage with no equity. Also, it's stressful. Again, another reason why having to put money into a property each month can be stressful. That's not what you signed up for. You'll always be wondering if you're going to be able to afford it. That's why I think you should buy a property today that is already cash flow positive, even if the interest rates are a little higher, right? We still have higher interest rates right now. We're dealing with that in this economy. But if the cash flow is there now with these higher interest rates, you're building equity, and you'll have a bigger chunk of that equity, and your mortgage will be smaller as you pay it down over time. So imagine right now in this higher inflationary period, higher interest rate period, you find a great investment property that is cash flow positive, and you're building it with a bank's money, right? So you've got a mortgage on it, and yes, the interest rates are a little bit higher, but it's cash flow positive. You're putting money in your pocket every month. Think about the stress that will be gone. Not having to put money into your property will be less stressful. You know, you'll know that you can actually afford to pay for the property, and you're building equity, and you're paying down your mortgage. So yes, we are in a higher inflationary period right now. We're in a higher interest rate period right now. But if the numbers make sense right now, that it's still a great opportunity to invest in real estate in the long run, to make great profit, and to have that cash flow coming in every month. So let's say you've got a higher interest rate right now, and the cash flow that you're making every month is maybe $400 cash flow per month. That's after your expenses, and that's after you're paying your mortgage. You've got $400 that's now in your pocket. These clients that I was telling you about were literally negative. They were losing $100 every month. Think about that. It's insanity. Why would anyone do that? It's because they're being sold a bill of goods, and these companies are telling you, hey, 5 years from now, you'll be cash flow positive. So invest now, so 5 years from now, you'll have cash flow. What? It's insanity. And I got to say, it's really infuriating. It's really upsetting. And to think that people would be taken advantage of in this way really makes me upset. I wanted to do this video sort of off the cuff here because you should not be doing this, okay? You should not be buying a property that's cash flow negative or zero cash flow, okay? And you should not be buying a property that is above the appraised value of the property. You should be buying a property that's at the appraised value or even below it. Yes, cheaper than the appraised value. So you get sort of built-in equity. And you should be buying an investment property, a full-service turnkey investment property that is cash flow positive. After all, that's why you're doing this. The tax benefits, the cash flow, the equity position, all of those things. So if you'd like to book a call with our team, that's exactly what our team does at Morris Invest. You can go to our website, morrisinvest.com, have a phone call with our team and talk about the properties. And we'll show you some cash flow positive properties that are at or below appraised value. That's what you should be investing in my humble opinion. Let me know in the comments below what you think about this, and we'll see you next time, everyone.